Hey everybody, hope everyone's doing well. This is the Emini end of day review for Thursday, August 1st, 2024. So we'll look at the daily chart first. And I flip back and forth between the Globex session and the regular day session, and I want to look at both today. So this is the daily chart, and we know we've had this bull channel trendline break. We've gone sideways. Then we had this big bull bar yesterday, but this is the Globex session or the extended hours chart. So if we look at the day only chart or the regular trading hours, we have this small bull bar closing below its midpoint. And I just wanted to show this bar or this chart and this bar because when I show the 5-minute chart, it's kind of confusing because on this chart we have this small bar and then you can see relatively small day. It's like a 60-point day. So about 60 points when we've had days over 100 points. So a fairly small day. But in reading the price action, I want to look at the Globex chart and talk about that. So coming into the day, expectations. We had this trend line break. We went sideways. Bears who sold down here, disappointed by the pullback, and they got out at break even. We bounced. And then we had this huge bull trend bar. But if you think about the context that the market, you think about whether the market's in a trend or a trading range. The market's clearly in a trading range. We have a bull leg up, bear legs down, and we're going sideways in here. So we have this big bull trend bar, but the problem with it, big trend bars in general usually attract profit taking and are typically climactic. And then you add the fact that the market's in a trading range. And then of course here, look at this bear breakout. Here's 50%. That's about where we tested. And there's the 5,600 big round number, which the high of yesterday on the Globex session was 55.8850. And so expectations coming into the day, I thought the bulls would be disappointed. Sellers above yesterday's high. Maybe we get a test of 5,600 and then find sellers, but I did think we would go more sideways to down today. I wasn't expecting this. But also the fact, one more thing about the day only, small bar, so increased risk or increased chance that we get an outside day. So with that said, go ahead and look at the 5-minute. I have yesterday's high and yesterday's low drawn. And coming into the day, we have a small gap up and then a bull trend bar on bar 1. Bar 1's a good bar for the bulls, but the context is bad. Bull trend bar closing on its high, but we're still within the range of yesterday. We have big up, big down, a couple of legs up, maybe 1, 2, 3 legs up, and the bulls aren't breaking out yet. So we have a late leg and not really breaking out on bar 1. So we need more information if we're going to buy. I'm willing to buy if the bulls can prove that they're strong and they get consecutive bull bars closing far above resistance. But at this point, I'm hesitant, and I suspect there are sellers above yesterday's high, and I would just draw the 5,600 big round number because that might be an important magnet as well. And then bar 2, we had a doji. It's a minimum follow through for the bulls. It's a high 1 buy, but again, top of a trading range, 3 legs up, 1, 2, 3. I'll go ahead and draw that. So probably more sellers above bar 2. But again, they may not come in until we at least get above yesterday's high. And then again, maybe we have to test 5,600 before the strong bears come in. And so I don't necessarily think bulls are buying here aggressively. But I think with the market going up, it's more due to the strong bears stepping aside and the market, the price is vacuuming up to some resistance level. Then bar 3, another big bull trend bar, even bigger than bar 1, climactic, big, small, big. So when you get a trend bar, sort of a biclimax, a pause, and then another one, it's common to see profit taking on the close or following a bar like bar 3. So at least I'm expecting profit taking for the price action reason, plus the context. We're at 5,600. It's the first bar breaking out of yesterday's high, where again I'm expecting disappointment for the bulls and sellers above. So I'm expecting disappointment after bar 3. Bar 3 might be more of a sell to close bar, which might be aggressive. This looks like it's strong enough for a second leg up. Micro channel since 81. But again, the context looks like it's 3 legs up, and a couple of different ways. It's a bull breakout attempt of a bull channel. If you look at this, if you look at yesterday as a broad bull channel, we're attempting to break out of the channel line, which is maybe a 25% probability. More likely, we reverse within 5 bars and then test the trend line, which would be all the way down here. I'm going to clean up the chart a little bit. Bar 4, we tested 5,600. We actually came one tick. Bar 3 came within one tick of 5,600, and then we tested it on bar 4, went 3 ticks above it, and then reversed down. So bar 4 is a disappointing entry bar. If you look at bar 3 as the breakout bar, some bulls might argue it's basically a doji, it's a minimum follow through, but this does not look like a strong bull breakout. The context isn't good. It looks more like a trading range. It's interesting what happened yesterday and then what happened today, or what's happening here. We had 3 pushes up, 1, 2, 3, and then a deep pullback, and then here, 1, 2, 3. So my concern with being long here is that we can get a deep pullback before we come back up and test this area. Or, worst case for the bulls, we get a major reversal and don't come back at all. Bar 5 was a bear bar, but basically a trading range bar, closed around its midpoint. So bears, they could sell below bar 4, taking a chance. We get an early high of the day. Big, small, big, disappointment. Bulls give up below. It's a small signal bar. And so bears want a good entry bar, and this is okay. The reason it's okay, it's not great, obviously, because it would have been better if it closed on its low. But it's also not bad, because if you think about the flip side, the context isn't great for being long. If anything, the context might actually be always in short at this point, even though it's a tight bull channel here. And a breakout on a higher time frame, it might be a second leg trap, 1, deep pullback, 2, which subdivided into 3 legs. And so here, bar 5 is a high 1 signal bar, probably sellers above. So if you shorted below 4, and you would want to use a wide stop, because the signal bar is small, it's okay to hold short, because the odds are there's sellers above 5, and maybe even sellers on the close of 5. Bulls disappointed, giving up. And then 6 rallied above 5, I believe. Actually, it's the same price, so 5 and 6 have the same high. 6 rallied, and that may be the second leg that the bulls get. We rallied strong enough for a second leg up here, pull back. Bulls who bought the close of 3, disappointed, and then 6 rallied. So from the low of bar 5 to the high of bar 6 could be that second leg. We tested the high close of bar 3, 98.25, and the high was 98.50. So if you bought the close of 3, scaled in lower, 6 would have retested your entry price and went above it by a tick, and you would have been able to avoid a loss, exit break even on that trade. It looks like that's what bulls did. We sold off, rallied, sold off again. So now 6 is a second reversal, And on a small time frame, it's more clear this is actually a small major trend reversal pattern. Here we have a tight bull channel. Here's the trend line. Small trend line break here, then a retest of the highs, and then another reversal down. Bar 4 was the first reversal, and then we rallied, and then bar 6, second reversal. So some traders will sell below 6. Bulls can exit below 6 because it's a second reversal, and the criteria for exiting a trade doesn't have to be as strong for entry. So if you're long, I think bar 6 is an area where a lot of bulls will get out. And for that reason, and for other reasons, the context makes sense. Bears will also sell below bar 6, looking for a swing down. And then 7 was a bear reversal bar, closing near its low. It's a good entry bar for the bears. The bears now have a 4-bar micro channel and a bear bar closing on its low. Overall, looks like a trading range, and we are high in the trading range. Bears want to sell in the upper third. If this is the trading range, we are still in the upper third, and so we might get more selling below a good-looking signal bar when the context is fairly good. A couple of buy climaxes up. High in the range, bad context for the bulls. We tested 5,600, reversed, or we're reversing down. So 7's a reasonable stop order short. And then bar 8 was a good entry bar for the bears. Strong trend bar, basically opening on its high and closing on its low. Big body, small tails. We have trapped traders, micro gaps. The low of 6 does not overlap the high of 8. And if a bull was long for any reason, they're getting trapped here. This is a major leg 1 bear breakout. And so when you see this, it's important to get short. It's an always in flip, even though I said back here, because of context, it might be always in short. Once you get this confirmation, crossing the moving average, consecutive bear bars, one being big, both closing near their lows, there's a lot of reasons to expect the market to go lower and for bulls to not buy for at least a couple of legs down. We have this wedge. The minimum expectation is 10 bars and 2 legs of a correction, and this is looking pretty strong so far. So we're probably going lower. It's possible we go for a measured move of the breakout. So more and more bears may be convinced to short here, and more bulls might be getting squeezed out, forced to sell out of their longs, and probably not look to buy for a couple of legs down and lower prices. 9, we had a low 1. It's an inside bar. Variation of a low 1. It's not technical on this chart. But after a strong breakout, it's a reasonable place to get short. You can see we rallied but did not close the gap, so bulls are still trapped. The momentum down is strong enough. We're probably getting a second leg down, and the first pullback will likely be minor. 10 falling further. The bear breakout is continuing. We have not had a pullback throughout this entire sell-off. The characteristic of the market may be changing at this point once you have all of this information and you look back over here. One of the most important skills you can develop is being able to distinguish between whether a leg is a leg in a trend or a leg in a trading range. And over here are some good examples of legs in trading ranges. Through here you can see we have overlap, deep pullbacks, bars not breaking out above or closing above the highs of the prior bars, and then 3 pushes, fairly distinct. Over here, lots of dojis, lots of overlap. Here, deep pullbacks, buy climaxes with deep pullbacks. Breakouts not going very far. You compare those legs to this leg. Even this bear leg had problems because 70 was climactic. And the context is different at this point. By bar 72, we're low in the range, and this was fairly steep. It would likely get a second leg, whereas this was more clearly 3 pushes up, and then this breakout is stronger. We have more uniform sized bars closing near their lows, less overlap, we have micro gaps. So this might be a bear leg in a bear trend. And again, I said it's a major leg 1 breakout. So even at this point, you can sell the close, sell for any reason. The market's probably going lower. And even if it pulls back, use a wide stop above the top of the spike, you have a high probability of making money. 11 falling further, probably sellers above, might be sellers on the close. We're pulling back, and we can look at the measured move of bars 7 and 8. Maybe use the bodies. You can see we tested that on bar 11. So maybe we extend it and use the extremes of the breakout and follow through. Then we have the next target down here. But again, this is too steep. The first reversal up will likely fail. Bad stop order buy above 11, probably sellers above. Probably going lower. At this point, we have enough momentum and the context to make sense. We had a relatively small day yesterday. We went above the high, and we are reversing down pretty strongly. We'll probably get to yesterday's low. That's probably the next major target. 12, a bear bar, closing on its low, racing down to support maybe this measured move target. But you have to pay attention to how the market reacts at each support or resistance level. So in this case, the market is just breaking straight through all the support. That's characteristic of trending behavior. Think about it. When the market is trending, 80% of reversal attempts fail. That means all the support we see to the left will probably fail. So we have the bottom of this wedge. Maybe the bulls are hoping for a double bottom. But look at the price action and look at how the market approached yesterday's high with 3 pushes up. Lots of overlap, deep pullbacks. Compare this bull leg to this bear leg. It's clearly stronger going down. So as far as buying here, you're really taking a chance, especially if you're buying on a limit order. It's like catching a falling knife. 13, we did get a bounce. We have profit taking from the bears. This is more due to bears taking profits below a swing point than bulls buying aggressively. Look at bar 13. It's a doji. It's following maybe 10 consecutive bear bars. Do you really want to buy above 13? Maybe it's a double bottom, low in the trading range. However, this leg is too strong. The first reversal up will very likely fail. If anything, selling above 13 is better than buying above it. 13 might be a trade that gets beginners into trouble. It's one of those trades Al talks about all the time where the risk is small, the potential reward is huge. Let's say you buy below the bar. You put a stop below, and here's your 1-to-1. But if this is an entire trading range, maybe you can make 2-to-1, 3-to-1. So you have small risk, big potential reward. The problem with that is your low probability. Beginners think of really just risk and maybe risk reward, but they always forget about probability. And that's why Al talks about bleeding to death from 1,000 paper cuts. You have this trade here that looks like it's a reversal bar, double bottom, low in a trading range. I'll buy and make 3 times my risk, which sounds great, but you might be taking a 20% probability trade because this looks like a bear trend. Support is failing, and 80% of trend reversal attempts fail. Didn't even give you a chance to buy above. Instead, 14 is continuing lower. Now 14 is the next stop order buy. This is still a micro channel. Very strong bear breakout. Even though not all the bars are closing on their lows, we even have a bull bar here. This is so tight, and this is controlled, sustained selling. It's very likely this gets a second leg, and we'll probably go a lot lower. I don't think the bulls will have to do something. There has to be some sort of surprise, like a deep pullback, and then a retest to make me believe this is not going straight through yesterday's low and much lower. The reality is we could even fall for a measured move of this entire breakout. Probably sellers above, maybe sellers on the close. It's still sell for any reason, always in short. Even if you sold the low tick of this spike, use a wide stop, you can scale in. Even if you don't scale in, there's a high probability you'll make money. But clearly always in short. You should be flat or short, and there's not really a reason to be looking to buy. 15, continuing lower. The micro channel continues, probably sellers above, and breakouts are succeeding. So you have traders selling below bars all the way down. 16, bear breakout. It's a strong bar. Now at this point, it might be a parabolic wedge, and it's kind of difficult to see on this chart, but we have a breakout, a pause, another breakout, a pause, and then a third breakout, and then 16 is a little climactic, one of the strongest and biggest bars in the spike. Actually, the biggest bar in the spike. It's a little climactic, maybe a vacuum test of yesterday's low, but you can see we went straight through it and even closed below it. So whenever there's a parabolic wedge, like here, sure there are 3 pushes down, but these 3 pushes are much different from these 3 pushes, and you can just, something to study, maybe on your own time, and just kind of compare these 3 pushes up to these 3 pushes, and you can clearly see the parabolic wedge is very tight, sustained. It's actually all a micro channel. So even though 16 is climactic, you might have bears taking profits, and we might bounce here. You know that any reversal attempt here will very likely be minor. So it's okay to even short here and hold short with a wide enough stop. By the way, the theoretical stop is at the top of the spike, but no trader is actually using that stop, and no one would ever actually let that stop get run. Traders might use a stop like a measured move of a recent bar. So maybe you take bar 16, put your stop and measured move up, somewhere like there. But in theory, the stop goes up here, and if you're selling, here's your 1-to-1. So at some point, it's a parabolic wedge, and bears might get uncomfortable with the big risk, so they reduce their position sizes and take some profits. But again, the bulls have really nothing. There's hardly any buying pressure. There's really no buying pressure through here. So still always in short. Better to be short. 17, we rallied, but it's an inside bar, probably sellers above. Maybe buyers below, but only bears who sold the close of 16 may be disappointed. Maybe we get a small bounce, but this is minor, probably a bear flag. 18, low 1 short. It's a consecutive inside bars and a pretty decent bear reversal bar closing near its low. It's a low 1 after a strong spike. Might be good enough for at least a scalp, but of course, strong enough breakout, you could still sell anywhere, including this low 1 with a reasonable stop up here and have a high probability of making money. And then 19, sellers below. We got a strong breakout. 19, still no reason to buy. It's actually still a micro channel, so probably going lower. First reversal attempt will likely be minor, and this entire tight channel, even on this chart, is technically a breakout. 20, we have a pause bar. Again, bears taking profits. There is a channel line. It's hard for us to see. It's very tight, but maybe we're testing that channel line and finding bears taking profits. But again, the bulls just don't have a reason to buy. No one's going to buy above bar 20. It's more of a bar that you would sell above. There might be buyers below, bears taking profits below. But right now, the bulls are not making money. Even limit order bulls are not making money. So there's no reason to buy. Inside bar 21. Low 1 in a tight bear channel, in a breakout. It's reasonable to sell, use a wide stop, and be willing to scale in. We might come back and test this breakout point, the 16 low, but I suspect there's sellers above here, probably going more sideways and then eventually down. This is too strong to be looking to buy. 22, a second leg up. Leg 1, pull back, pause. Leg 2, it's a bigger bar than bar 20. might be a second leg trap, and this is a small trading range, but of course here is a bear flag. We're testing the breakout point. We got close to it, didn't quite get there, but we were expecting resistance in this area. So if we do get above 23, there are probably sellers above, and bears are expecting this to be a minor reversal. Bulls who are long for any reason are scalping, and then they will not look to buy until, or at least buy and hold, buy and swing, until there's a significant trendline break and much more buying pressure. Bear bar 24, falling below 23. By the way, first pullback above 21, so very likely sellers above, and high probability that if you sell above, you'll make money. Now we have a possible double bottom with 20 and 24. 24 is a weak, or 23 is a weak signal bar to buy above. And in a trend, especially such a strong trend, most reversal attempts fail and become continuation patterns. So it's better to sell above 23, sell the close, expect the downside breakout. Whenever you have a breakout that is this strong and this controlled, it's very sustainable. The bears have time and price control. This is one of those examples. You might have heard me talk about this before, where this is clearly always in short. You look at this chart and you had to choose to be long or short. Of course you'd want to be short. And it's kind of like, you got to think about the fact that trends have inertia. All markets have inertia. If it's going sideways, it'll tend to keep going sideways. If it's trending, it tends to keep trending. That's basically Al's 80% rule stated a different way. So when you have such strong momentum and inertia, you can imagine this breakout, this strong bear trend, as if it's an aircraft carrier in the ocean. When you think about those aircraft carriers need something like a mile. They need to start putting on the brakes a mile before they actually want to stop, because there's just so much momentum and just so much mass and inertia behind the ship. And this is that type of breakout. This is not enough. This is not nearly enough to be the bottom. It's very likely this is just profit taking, a minor reversal, and we'll go lower. There hasn't been a major trendline break. That's just not enough. 24, another bear bar, another bad buy signal bar, and the bear's getting the breakout below 23, below the double top. Will probably at least come down to here. Bear bar closing on its low. Bulls probably uninterested in buying, probably go lower. 25, another bear bar, 3 bar or 4 bar micro channel. Odds are the first reversal will fail. Bad stop order buy, reasonable to be short, okay to be short, probably going lower. Small bear bar, 26. This is good for the bears. It's controlled, not climactic, and still no reason for the bulls to buy. There's one more measured move target I'm actually interested in. Maybe that's leg 1, and then maybe from here we get a leg 2. So maybe down here, I'm just gonna put that down there. Bear breakout 27, racing down to this magnet and closing below. The trend is still strong. It's a very tight channel. The odds are we're going lower. All of the minor support is failing, and so we need to think about the higher time frame context. You could zoom out and look at that. Here's a leg 2 measure move, and it's testing. It would be testing the low of 2 days ago. And so this might be the major support that the market finds buyers at. But again, for now, too much momentum, nothing to buy, probably going lower, reasonable to sell, probably sell the close. Yeah, we are far below the moving average, but this is far above average bearishness. Pause bar 28, minimum follow through, micro channel for about 7 bars, and a doji signal bar if you're buying above it. The odds are, and it's a small bar, so the odds are if you buy above 28, you will lose money. So bad stop order means good limit order. You can sell above 28, use a wide stop, you'll probably make money. 29, we're pulling back, but again, similar to here, this looks like a minor reversal, probably bears taking profits, bulls unwilling to buy because even limit order bulls are not making money, or they're having a very hard time making money. It's much easier to make money being short. Might be enough up that we get a small second leg, but any small second leg is minor, and it's better to look to be short or look to sell a low 2. Low 1 below 30, bear, reversal bar. Still a tight channel, reasonable to sell below, but we might get buyers below and a small second leg up and a low 2. And we went almost outside up, might be an outside up variant. So the low is below the low of the prior bar, the highs are equal. It functions the same as an outside bar, basically the same, even though it's not technical. 31 being an outside bar and a second leg against a strong trend, it has reasons to sell above and sell the close. Leg 1, pause, leg 2. Outside bars are expanding triangles, so better to be selling high in that trading range than buying. And this is probably a minor reversal. Look at the big picture context, probably sellers above. 32 going a little higher, testing breakout points. Maybe the bar 20 low to swing point. But yeah, probably sellers at that area. You can see the market tested it and then pulled back. Consecutive bull bars. But this is still a minor reversal. Trends get weaker as they go on, but this is still strong. The bulls have a small trend line break, but the bears will simply redraw their channel line, something like that. And even though it's consecutive bull bars, it's a weak signal bar to sell below, and this might be enough for another leg up. All of this buying right now is minor, so it's still okay to hold short, stop above the most recent major lower high above bar 22, and reasonable to sell rallies because the market is in a bear channel. Pause bar 33, inside bar, high 1, bad context, 2 legs up against a strong trend at a breakout point, and maybe a trend line as well. Probably sellers above. 34, went to a new high, maybe that's a third push. It's a wedge, bear flag. 1, 2, 3. And a decent signal bar. It's a doji, but it's a reversal bar, closing near its low. So bulls will exit below 34. Bears can sell if they exited for any reason. It's still always in short, reasonable to sell. And then you can see a strong entry bar, sellers below 34. Strong bar 35, probably going lower, and probably going for a measured move down. Kind of like over here, which I didn't show that measured move either. But remember I said over here, bulls might be hoping we have a double bottom. Of course, the context was bad. The price action approaching the double bottom price is too strong. But in theory, the bulls had a double bottom with 72 and 12 or 13. And they'd be hoping for a breakout above the neckline way up here and a measured move up. The bears hoping for the opposite, so we can look at the measured move of the double bottom down. And you can see we are approaching that price. Same logic here, wedge, bulls hoping for the upside breakout and a measured move, but more likely we break below the neckline and fall for a measured move down. Look at the momentum, look at the context. 36, bull bar, bulls hoping we have a double bottom, buy above 36, and once again it's kind of like 13, or buying anywhere. Your risk is small, maybe you risk below bar 36, maybe it's about 8 points, and you could make 50 points. You could make much more than your risk going for a big swing. But all the bars are below the moving average. It's pretty clearly a strong bear trend, and 80% of reversal attempts will fail. 36 is a more likely a continuation pattern. Better to sell above the bar, even if it's a bull bar closing on its high and it looks like a double bottom. Context does not support buying. It's always in short in a bear trend. The buy did not trigger, and we have a 2-bar reversal, 37 going lower. Probably going to break below the neckline and see what's there. And then we broke below and found sellers into the close, so probably going lower. I'll redraw that. I should move. 39, we fell further. This is a micro channel since 34. It's a breakout on a higher time frame. Some traders see 3 pushes. Maybe here. 1, 2, 3. Maybe it has to be wider. Let me fall further. But we are getting a pause bar, profit taking. But there's nothing to buy. This is too tight. This is a weak signal bar. The context is still a tight bear channel. Probably sellers above 39. 40 triggered the buy, but likely to fail. Sellers above, maybe testing this breakout point, the bar 28 low. You can see we tested it and then sold off into the close. This again looks like a minor reversal, still always in short, still reasonable to be short. 41, it's a micro double bottom with 39, but again, 80% of these reversal attempts will fail. You have a couple of dojis. You hardly have a trendline break. You can even argue there's no trendline break here. So the buying pressure is not sufficient. We're in a tight bear channel, probably going lower. You can sell above any reversal setup, betting it's a continuation pattern. 42, we triggered above the buy and then reversed down. Low 2, below 42, in a bear trend, reasonable to sell. 43, head and shoulders bottom, 39, 41, 43. And once again, I can't say it enough, reversal patterns in trends it's better to refer to them as continuation patterns because 80% of them fail. We don't have a major trend reversal set up here. Still a tight bear channel, probably going lower, sellers above. And then we sold off with a little bit of a give up bar on 44. Bear trend bar, probably going lower, maybe test the bear channel line, maybe the double bottom or the wedge bear flag, measured move target. Bulls uninterested in buying. There is just not enough buying pressure. Bear breakout and follow through, probably going lower, sellers above, sellers on the close. 46, continuing lower, bear bars, closing on their lows, nothing to buy. Always in short, reasonable to be short until there's a reasonable reversal setup or a signal in the opposite direction, which we just have not had. More to the downside. Now we have maybe a 5 or 6 bar micro channel. So the odds that we pull back soon are getting greater. Maybe we test this wedge bear flag target, which it looks like we did on bar 47. So for those reasons, we're testing a support level, 6 bars in a micro channel. We might bounce, but that's not enough reason to buy. And then we have profit taking 48 outside bar, probably sellers above. Inside bar 49, IOI, breakout mode, but no reason to buy. Better to be short. Downside breakout more likely. 50, bear breakout, testing a trend line. Everybody draws trend lines differently. All the algorithms and traders, everyone's trading for different reasons. And some traders will say this has already been a channel line breakout. But the way I had it drawn, it was a parallel of this line. Looks like a test of the channel line. So we might get, that might be contributing to the fact or the reason this bar is selling off. We're testing support, the channel line, but the best case scenario earlier, if you bought here, was a weak 3-legged rally. And so here, again, probably expect a minor reversal, if anything, but still okay to be short, hold short, stop above 42, the last recent major lower high. You could argue 48 is a major lower high, but there's an increased risk. If we go above there, we'll probably not convert into a bull trend, and there's probably sellers above 48. 51, testing the channel line I have drawn. Micro channel for 4 bars. 51's a weak buy signal bar. We are at a support level, the channel line. There's probably some measured move target as well. Plus it could be 1, 2, 3 legs down. So maybe we correct here, but any buying is likely minor. We triggered above 51 and then have a low 1 signal bar 52. The trend's a little extended, and that doesn't mean there's any reason to buy right now, but this has gone on for about 40 or 50 bars, and it can continue further. Channels can go on a long, long time, but a low 1 here at the channel line with maybe 3 pushes down might have profit taking below. And then we had an outside bar 53. 53 is a strong bull bar, but it's a minor leg 1 breakout, so you're expecting a second leg after 53. However, the second leg, you can get a deep pullback even below the bar before there's any second leg. There's actually a good example of that recently. I was thinking of this one. So bar 32, bear breakout, the small pullback trend. It's a bear trend, and then you have this minor leg 1 bull breakout. It's a strong bull bar, but it's minor. So you'd expect a second leg, but the market could go below the low of the bar and get a deep pullback before the second leg, and that's exactly what happened in this case. The second leg was sideways, basically the same price as the first. So that's pretty much my expectation with what we're looking at right now today. $54 consecutive bull bars, both closing on their highs. Is it always in long? No. The market has been completely below the moving average. If anything, 54 is a sell to close bar because it's a rally in a tight bear channel, testing close to the moving average, also testing near 48, which remember I said probably sellers at this price. But this is strong enough for a second leg, and it's likely there are buyers below 54 or at maybe a 50% pullback of this rally for a small second leg. But it's still always in short, reasonable to hold short. 55 tested the moving average and then reversed down, closing on its low. Low 1 short. If I had to bet on the low 1 succeeding or on it failing and the bulls buying below for a scalp and a second leg up, because it's always in short, because of the context, because of the strength of bar 55, I would rather not take my chances buying. And I think it's a lot easier through here to make money selling. So even though this looks strong enough for a second leg, and it can quite possibly will get one, 55, low 1, I'd rather be selling below it. So reasonable to short, reasonable to be short. Stop's still up here. And the odds are if we get above 55, there's sellers above. 56, if you're a bull and you bought below, betting on a second leg, that's your entry bar. You might give up. You might also argue it's leg 1, pull back within 56, small leg 2, and then another bounce. But through here, the market is still within this channel. It might be becoming more two-sided, and this breakout might have been strong enough for buyers below, but we'll mark it and we will see. 57, continuing lower. So if you bought, you're getting squeezed. You might have to be forced to liquidate and sell out of your longs. 3 consecutive bear bars in a tight bear channel, probably sellers above. 4 consecutive bear bars, getting below 53. Bulls buying below here, hoping for buyers below in a second leg. This is their entry bar. This is the momentum. It looks like more likely, just like I said, up here, and for the flag, the wedge bear flag here, this is a double bottom attempt for the bulls. Even if they don't get a signal bar, there is a double bottom, which it looks like we're breaking below the neckline and failing. Maybe we come down here. It's near the leg 2 measured move. More likely we're going lower. We did bounce on 59. We traded above 58, which was a 4-bar micro channel, the signal bar for the double bottom. Odds were sellers above. Now we have a low 1, maybe low. You can argue low in a trading range, but it could still be a bear channel, and it technically is still a bear trend. We're getting lower highs and lower lows. So buying below here is aggressive, especially after this sell-off. It's probably getting a second leg down. 60, we fell below the prior bar to a new low, but had buyers into the close. The market looks like it's getting more two-sided, weaker breakouts to lows, but 60 is a weak signal bar for buying above, probably sellers above. Inside bar, 61. We actually did break out below 60. Small breakout bar, but closed within the bar, but still tight enough for a second leg and sellers above. 62, the bulls attempting to break out above, but we're testing this price, the low of 53, where bulls may have gotten trapped. More likely this is resistance, and then outside down 63. So we're in a channel. It's getting more two-sided, and there's more overlap, but the buying pressure is still weak. Even though the bulls had this and this, it's very minor. And look at the continuation after, very steep and strong. Nothing to buy, probably going lower. 64, still within the channel and still always in short, no reason to buy. Reasonable to be short, but it might be 3 pushes down, we might bounce. Some profit taking on 65, but minor reversal, probably going more sideways to down. 66, we rallied above 65, now we might have a wedge. Bear flag, it's very minor, but I'm talking about the past 3 bars. We rallied, pulled back, rallied, pulled back, rallied a third time. And of course, look at the context. It's a tight bear channel, probably sellers above. 67, another bull breakout bar, not closing above the prior bar. So these bull breakouts have problems. They're getting higher highs and higher lows, but the closes are not closing above the prior bar's high. This is a weak rally and more likely a bear flag. There might be a double top with 63 and 67. Maybe we'll go a little higher, but the odds are there's sellers above. 68 triggered below 67. That was a low 1, 4-bar bull micro channel. Buyers below for a scalp, but now we have a bad high 1, sellers above, and a double top. 69, second leg up for the bulls, 1, pullback 2, testing the trend line, but the rally's weak. Bull bars closing below their midpoints or not above the prior bar's highs. We have had 5 bars without a bear body, and that is more characteristic of a trading range than a bear trend. But this looks like a bear flag. We're still within the channel. The odds are there's sellers in this area. Inside bar 70. Maybe it's a high 1. Bull bar closing on its high, but 2 legs up and testing the trend line in a tight bear channel. The odds are the reversal is minor. 71, going a little higher, but bull breakout not closing above 69. Still minor, but lots of bars without a bear body. And so there might be buyers below 65. 72, continuing to break the trend line. So bulls have time control, even though the price is only going up very gradually, and we only have 3 or maybe 4 bars breaking the trend line. This is pretty sustained buying, and it's disappointing, so that there's probably buyers below. Tight enough channel, even though there's pullbacks along the way. 1 pullback here and pauses. Probably buyers below for a second leg. 73, a little bit of a climax, testing resistance. We had bulls by the close of 54 and get trapped. That will be resistance. The high of 55 will also be resistance. Again, this might have been the start of a trading range with buyers below. They came in a little lower. Now we're getting what looks like a bull leg in a trading range. Lots of smaller overlapping bars. Big down, big up, probably sellers above. 74, bull trend bar, but it looks like a buy vacuum. And it might be 3 pushes. 1, 2, 3. A couple of ways to look at it, but it looks like buy climaxes with pauses between them. So a good looking bull bar, but context is bad. Probably more sellers above. 75, trader sold to close, but 75 is the first bear bar in about 10 bars. And after the sustained buying and the first pullback since here. Probably buyers below 74, buyers on the close of 75. It's testing the moving average. This rally broke straight through the moving average. Bears who sold the moving average got trapped, and they'll use 75 to exit. And again, this will likely get a second leg, but probably a trading range, sellers above. 76 bull trend bar, but might be that second leg. And again, bears who got trapped using 75 to buy back shorts. Bulls can buy for a scalp, but the breakout looks like it failed. We tried to break out, but did not close above. Now we have big down, big up. Overall, looks like a trading range with a bear trend preceding it. The upside breakout is unlikely, but we did have a major lower high here on 55, and the bulls broke it. So at this point, the odds are the market is in a trading range or a bull trend, but I think more likely it's a trading range. We went a little higher on 77 and found sellers above. 77 is a second reversal signal bar, and there might be sellers below, but the problem with it is that the bar is big. So big risk. Traders would rather sell a pullback, maybe with limit orders higher in the range, rather than selling right at the moving average on the tight bull trend line. 78 rallying, testing this price once again, high in the range, but now we have 1, 2, 3 pushes high in the trading range. 78, it's an inside bar, reduces the probability for breakouts, more of a sell to close bar. And then upside down 79, testing back to maybe the middle of the trading range, maybe a 50% pullback. In this case, it actually is deeper, maybe more like 70% or 60%, but lower in the range, middle to lower half, and probably buyers. It's an outside bar, trading range within a trading range, probably buyers below. Inside bar on 80, low 1, IOI, it's breakout mode, clearly sideways, and weak sell signal bar, probably buyers below, and then probably sellers above as well. And then 81, just sideways. For always in, coming into the day, I thought the market was getting 3 pushes up in an overall trading range, testing resistance and expecting sellers above yesterday's high, maybe a test of 5,600, but the point is I was expecting a limited upside, and then there was sort of climactic 3 pushes, disappointment for the bulls here. So probably always in short somewhere in here, if not certainly by bar 8, and of course all the way down. Did the market become always in long in here? I don't think so. I think, first of all, what I was trying to say is that all through here is certainly still always in short. You can argue getting out below a pair of good bull bars might be enough to convert the market into a trading range, and then you get 3 legs down. So there's reasons to take profits down here. But let's say you're staying short, holding short, still always in short. At some point, maybe you get 4, 5 bars against you. You can just get out of the short and look to sell higher or look for the next trade. But the problem with always in, good looking bull bar, lots of bull bars, but high in the range. So up here, probably always in short. And I'm not sure if I would have ever considered any point today always in long. For stop orders today, I thought you could sell below 4, betting it's 3 pushes up. You're taking a chance. It's a small signal bar. It's the type of trade you give. You watch the entry bar and you manage the trade closely. And if it does anything to disappoint you, you just get out. And you actually might have just given up on the trade if you sold below 4, and then maybe you do it again on bar 6. But if you do it below 6, you sell below 6, second reversal, so it's better than bar 4. Context is good, entry bar is good on 7, follow through is good at 8. Really no reason to get out all the way down. You can reduce your position, take profits along the way, but again, it was always in short. When the market's getting a strong breakout, stop orders are succeeding. So if buy orders are bad, bulls are not making money, Then if a bull is buying above a bar, stop below a bar, their stop will likely get run. So you can sell on a stop below any bar and likely make money all the way down. In here it became a little more two-sided. We had that low 1, which might get a second leg, maybe a third leg, but then 34 was a low 3 at the moving average and a strong bear trend. Reasonable stop order, sell there, breakout pullback, and then continuation 37, 38 you could sell below. Still always in short, sell below bear bars, closing below their midpoint. Low 2 on 42, sell below any of these bars, even down here, but use a wide stop. Low 1, 55, you could take that stop order, but down here, 3 legs down, bulls might start looking to buy, but there was never a really decent signal bar. The bull bars did not close above the prior bars. None of them closed very close to their highs until bar 70. And then for limit order trades today, I thought you could sell above bar 2, betting the breakout of yesterday's high would fail, and it's a weak stop order signal bar. You could sell above, scale in, and then bar 5 retested it. Bears who sold disappointed, exited break even, but then the bulls didn't do enough. Sellers above 5, but that didn't trigger. If you had your limit order to sell the high of bar 5, that might not have even triggered. And then all through here, if you're waiting to sell a pullback, you wouldn't have gotten triggered until bar 22. You could sell above 28, betting it's a minor reversal. Sell above any of these bars, betting bear flag. Sell above here, bad high 1, bad high 2, bad high 1, bad high 1, bad high 1, 58, or double bottom, sellers above. Same with 61. Even here, you could sell, but down here, more likely, we might have a big up, big down, 3 pushes down. Might be better to be flat, buying back shorts down here. And then 3 consecutive bull bars. Maybe you could buy below, betting we're in a trading range. Up here, you could buy below. And then 75, you could sell above, high in the range, bad high 1 signal bar. And then 78, kind of the same, 3 pushes up, high in the range, inside bar, sellers above. Today was a bear trend day. And even though the market's in a trading range on the daily chart, and there's a lot of overlap, clearly we had a relentless small pullback bear trend day today. And where do we go tomorrow? As strong as today was, and we saw it on the 5-minute chart, it is possible we continue lower. But my concern is that all these bars have a lot of overlap, and we had a big buy climax yesterday, a big sell climax today. There might be more buyers below, and so I expect the bears to be disappointed tomorrow. Overall trading range, so probably buyers below, breakouts probably going to fail and not go far. But the one thing that would concern me fading is, I talked about this yesterday, so I want to talk about the 5-minute chart and the daily chart. So I said at the end of yesterday, I expected this big bull trend bar to have disappointing follow through and sellers above. And part of it was the context. We know that this was in the middle, the 50% pullback of the bear breakout, middle of a tight trading range, maybe 2 legs up, a second leg trap, a couple of reasons. But then you look at the 5-minute chart of this bar and look at it. It's a trading range day. It opened near its low, closed near its high. Also, I know I'm looking at the extended hours on the daily chart, the Globex, and on here I'm looking at the day-only session. But this information is important. The fact that it was sideways, I thought that if we went above the high of the day, there would be sellers. But then look at the bear trend day. That is not a trading range day. That is strong selling almost all the way down with a profit-taking rally at the end of the day, which I forgot to mention. This is more likely bears taking profits at the end of the day with about an hour left in the day than bulls buying relentlessly. So it's common to get those bounces at the end of trend days. And remember, most bars have tails on them, upper and lower. So we had that rally on the open, which created an upper tail. And then we had that bounce into the close, the lower tail. As always, please feel free to leave questions in the comments and include timestamps for any question specific to this video, and I will get back to you as soon as I can. Alright, I hope everybody has a good rest of their night. Thanks for watching.